Hey everyone, welcome to this week's release of the Hashrate Happy Hour podcast. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first, nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through the 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. On today's show, my guest is Taras Kulik. Taras is the CEO and founder of SunnySide Digital. SunnySide is a leading wholesale distributor for data center and digital mining hardware and infrastructure. The company is focused on providing a white glove service that is best in class to ensure that its customers' needs are met, whether that is procuring hardware or discreetly liquidating equipment. Taras is coming to the show with a background in investment banking and a deep experience in building out large, institutional-grade Bitcoin mining facilities and businesses. During the show today, Taras and I talk about what the early days of Bitcoin mining were like and the contrast of that today and how companies operate. We also talk about how complex it really is and what happens when you flip the light switch in your home, different capital allocation strategies for a Bitcoin mining company based on the strategy of that company, and we wrap things up with a discussion on how to value a Bitcoin mining ASIC server. This conversation with Taras was long overdue to share with you guys and gals, as he brings such a wealth of knowledge on Bitcoin mining hardware and infrastructure, and how all of that ties into the power industry. So with that, I hope that you enjoy today's conversation with Taras Kulik. Hey everybody, welcome back to the show. Like I said in the introduction, I'm here with Taras Kulik, the CEO and founder of SunnySide Digital. Taras, welcome to the show.
Thanks, Ben. Appreciate being on it.
Yeah, I'm looking forward to the conversation. It's honestly, it's long overdue. It's about time that we got you on the show, and I'm looking forward to really diving into your background. You've got a lot of experience and knowledge in this industry, and so I'm excited to jump into it. And
Appreciate that.
so with that being said, where I want to start in the conversation is kind of going back to like the wild, wild west days of Bitcoin mining. Bitcoin mining was certainly not as polished and as you see it today. And you were really a part of those days and really navigating kind of the early days of digital mining, Bitcoin mining. So what I'd love to hear about, and I'd love to have you kind of give us a walk through what were those early years and days like, and what were you seeing from like an operational standpoint or like a power, procurement standpoint. And I'd love for you to just dive into the early days.
Yeah, I mean, you kind of hit it on the head. The early days were really the Wild West. Bitcoin mining, with 90% of its costs on an ongoing basis being power, gravitated to what I would call has-been regions of the world where there had formerly been very heavy industry, which had abandoned that region, and miners were able to really repurpose heavy electrical distribution gear for the purposes of digital mining. So think of heavy, gray, muddy industrial areas on a global basis as like where geeks with servers would set up shop to get the lowest cost of power to operate what they needed to. So think of like old refineries on like aluminum, bauxite, really. Think of old manufacturing centers where like the factory is a carcass of its former glory, and there's just this big substation and a bunch of containers, if there were even containers. Or old cement factories. I've got, you know, interesting memories of being in backcountry China, where there's an old cement factory that was repurposed because they had a 50 megawatt substation, and they basically hollowed out these cement mixing stations to build in
Shit.
large scale at the time digital mining facilities within that infrastructure. And so, yeah, it's pretty cool because it was like going into places where you don't think anybody should be working, and yet you're building what now we really appreciate is the one of the industries of the future, which is really securing a global network for everybody's use and protection of value. So it was a lot of interesting stories. Countries where you never thought you'd end up being, you'd spend a lot of time in. I've been in a lot of the CIS countries, like former Soviet bloc countries. A lot of time in Kazakhstan, Georgia, and yeah, like Inner
Oh
Mongolia,
wow.
where I was the only Gwailo or white guy in like 1,000 kilometers in any direction, or 1,000 miles. Sorry for my American friends. Um, yeah, it was a lot of fun. It was scary as heck at some points. Um, but those were certainly formative days. I mean, one interesting story was on my way to Karaganda, Kazakhstan at one point, my luggage from the Caribbean where I was living was lost. And so this was like December, and I show up to like northern Kazakhstan, and I'm in sandals and shorts and a t-shirt.
Oh, oh
And I
no.
walk out of this airport and there's snow on the ground and all the locals are just like looking at me like I'm from the moon. And they all just start clapping. Oh man. Yeah,
Oh,
no, it was
that's
good times.
crazy. Yeah. Well,
Yeah.
and so maybe for the audience that maybe for the audience that's not familiar with yourself, what were you doing traveling the world like that, seeing these sites? Like what was giving you the visibility in these sites?
So I'll back up a little bit more. I did grad school 2012 to 2015. I did a JD MBA, so I got a law degree, not a lawyer. And then I did a master's in business focused on finance. I did 3 and a bit years in investment banking in Toronto, and then I went into industry. And when I went into industry, I was recruited to join a family office in the Caribbean. And so my family and I we moved to Antigua. And as part of the family office's investment thesis, they were very early as to how they were looking at exposure to digital assets. They'd allocated about 200 million US to deploy into digital mining. When I started with the family office subsidiary, they had 6,000 units in operation. And over about 18, 19 months, we built that from 6,000 to 330,000 units in 7 countries around the world. Um, so that's what I was doing. I was basically identifying, qualifying, negotiating, closing, then deploying, and then managing hash rate globally. Um,
That's
at first,
incredible.
yeah, it was a lot of fun. It was a lot of fun. It was insane, but it was a lot of fun.
And yeah, so I would imagine your schooling came in pretty handy and pretty big time when evaluating these sites, and just really trying to compare sites apples to apples, or evaluating business models and building out a business model. I would imagine back then you were probably the only one with a business model on this thing. It's-
We were one of the first to actually start looking at sites on a pure metric comparison basis. So one of my coverage sectors when I was in investment banking was metals and mining, and there's a metric called AISC, all-in sustaining costs, and it's basically like a thumb in the air as to like comparing a gold mine in Papua New Guinea versus a gold mine in northern Canada versus a gold mine in Africa, wherever, right? Like it basically
yeah.
consolidates everything into one metric, and that's really the methodology that I was able to bring um, into the mining space with the team that I was at. Now we've got all sorts of different metrics that the equity researchers use, but primarily it's dollar per megawatt or petahash or exahash per megawatt now, given how much the industry scaled. But yeah, it was certainly helpful, especially given the global reach of what we were doing with the family office.
Yeah, it's really cool. I have a longing to understand like the modeling side of the Bitcoin mining industry, and it's something that I'm trying to. My schooling is not in economics or math. So for me, it's a lot of slow learning, but I'm fascinated by like the modeling side of that business. So it's interesting to hear that. So you talked about at the opening, you were going to these sites and they're like dark, dingy corners of the world, skeletons of old manufacturing plants.
Oh
To
yeah.
contrast that with today. Walk us through what you see at like these pubcos now and what that contrast is like.
Well, at the pubcos, I mean, there's a huge variation. I mean, the upper crust is what you would expect for a modern day data center operation. You've got folks with fantastic pedigree coming in, former bankers, real engineers, like real credible people that you can rely on, and they're pushing a lot of the older school, less reliable folks out, which is, I think, part and parcel of what should be happening in this industry. It really is, on the industry evolution cycle, the maturation phase, which is where I think we should have been and where we ought to be. And so, we're working with a lot of fantastic public companies right now. I mean, CleanSpark has disclosed that we have, I think Marathon disclosed that we have. And there's numerous others that I'm waiting on permission to disclose that we've done mandates with them. But the ones that we work with, they're fantastic. I mean, they're strong teams. They're really thinking about capital preservation and how to be proper stewards of capital. And it goes to show when you go to the facility, they've got everything pretty much locked down. And as the industry continues and consolidates, as it will over the next few, I guess, years, really, that will happen more and more because it'll become a scale game, but also an efficiency game as to who can operate the mousetrap the most efficient. And that's where you need the brightest electricians and the engineers and technicians to make sure that you've got a well-oiled machine. And the team at Sunnyside that I've been building up, we're really excited about that because that's where ancillary services really comes in and really helping folks specialize in what they're good at, which is maintaining hash rate and providing a secondary service to help them maintain their hash rate. So I think just like oil and gold and major commodity sectors build up to get to a stable state, and then they really kind of build foundational operational excellence, and that's what I'm expecting to see. That's what we're seeing in the market today.
Yeah, it's a cool perspective because you certainly see that in the oil and gas industry, and just it's funny that industry is not one that gets a terrible rap. It gets mud thrown at it all the time, but when you actually take a closer look at that industry, there is so much cool innovation going on. I had Steve Barber on, and I think we only scratched the tip of the iceberg as far as like the innovation in that space.
Yep.
Him and I could probably get a whole nother show just on that alone. And yeah, I'm excited to see that path for Bitcoin mining and to see what can come out next.
Yeah, and I mean, I agree with a lot of what Steve says. Not all of what Steve says, but a lot of what Steve says. In that, humanity, we're an energy intensive species. And I've said this before on different podcasts as well, is that, you can chart the amount of progression and evolution of a society, and it's linearly related to its energy consumption. And that's not a bad thing. Consuming energy is not a bad thing. That is what life does, right? So
Yep.
the fact that we need to rely on carbon for now, I think that's a no-brainer for people that understand what energy consumption and thermal conversion really represents. But over the long term, 100%. Fission will be coming out. A lot other cleaner sources of power will be coming out. Small, medium nuclear reactors are definitely going to become a real thing. But that's 20, 30 years out. Like, we really need to
Yeah.
think through where we're going from an energy generation perspective. And I think Bitcoin mining is more of a support mechanism than most people realize. That being able to give somebody an economic backstop to overbuild power generation to drive the marginal cost down, that is a good thing for ratepayers like you and I, people. that
Yeah.
have like electricity bills. If a power generator can ever build, it knows that when we're not pulling the power, somebody else will, and they're paying, not the taxpayer or the ratepayer. They're going to overbuild. Pure economics.
Absolutely, absolutely. And I mean, even you just scale that down to like a really, really small example.
Yeah.
So I just as again this small example. So I bought a house. My wife and I we bought our house, and when we bought the house, it had a 100 amp panel in the basement, and we'd go into the kitchen and you turn the microwave on, and then you go plug the blender in, and you hit power on the blender, and the lights all go out, and we trip a breaker, and so we were our panel was undersized for the house.
Right.
And it was like, okay, well, we're kind of staring down the barrel of a $3,000 upgrade for an electrical panel. How do we make that more economical? And part of that build out, by the way, was we have more capacity than we would fill. So we were going to go from not enough capacity to too much. And it was a real light bulb moment for me where I was like, oh, well, I'll go plug 4 miners in to soak up that extra capacity. We'll get an upgraded panel. So we're going to be able to run everything in our house. And I'm going to be able to monetize that extra electricity so that now I'm paying off that electrical panel at a much faster clip than we would have otherwise. So it's a super small example of what you're talking about. It's perfect. I'm excited about it.
Yeah, I mean, as we actually start integrating hash rate generation into day-to-day life, I mean, I'm looking at a set to bring in an M50 or M50X to my home so that I can heat my pool with it. Because I'd rather be paying to generate hash rate and then using the heat that's generated for my pool versus just heating my pool and losing all that BTU into the air.
That's right. Yeah. Yeah,
I
it's
mean, it
very
just makes
cool.
sense.
Yeah, it makes a lot of sense. I think there's going to be a lot of innovation around that, and I promise we will get to it, because what you have a lot of experience in, and I'm excited to talk through, is really the Bitcoin ASIC hardware side of things, and I'm curious on a couple of things. So we will come back to that, I promise. But before we get there, you in your background, you have experience, you know, in one of your previous roles on the power side of things. And I first, what was your involvement there from the power side of things? And then, maybe we can just kind of keep going from there on why Bitcoin mining is helping with electrical expansion and things like that.
My role on the power generation side was really helping build up financial statements and also bringing data center off-takers to off-grid behind the meter power generation company here in Canada. Um, so it was interesting to get firsthand experience and exposure to the grid, long-term strips of gas contracting, some of the intricacies of how power is fed into the grid and how the lottery system works on generating power. Um, you really don't appreciate or understand how complex it is when you flick the light switch on in your house until you realize that this grid is basically a breathing, living entity that you are living within, which is kind of
Yeah.
weird to think about, but that's really what power generation is. There is no
Hmm.
stable source of electricity. There is multiple sources of electricity all overlapping to make sure that when I flick the switch, there's enough electrons flowing through the grid in my local area to power that light bulb for my use and enjoyment. So that in itself was freaking amazing, and I've grown to really appreciate the energy sector a lot more because of it. Um, and I'm still an advisor to the company, but my focus now is building up SunnySide Digital to really become a preeminent ancillary services provider for the data center and digital mining space.
Yeah, it's fantastic. The complexity of what goes on when you flip the light switch is incredible. It's very far from a stable state, that's for sure.
Yeah.
So when you mentioned that you were looking at data center off takers for generators, um, what was the interest from those? Like, were you hearing interest from the generators about vertically integrating? Was that something that was on their radar as those conversations were happening, or was it still just from a transactional, like, was it just transactional for them and they were just looking for customers?
What I can say without breaching NDAs is that some of the largest energy companies, and I use that term loosely, on the planet are very much looking at digital mining for a long term capital allocation for many of the reasons that we've already discussed. And in fact, if you look at some of the main sponsors of some of the upcoming conferences, you can probably guess who they are. But more
Shell.
importantly, it's the investors behind those companies that are really coming around to it. And if you look at the investor deck or investor stack of a few of the major pubcos, and you'll start to see a recurring theme that there is a lot of money looking at this space. And the minute they start getting very interested, aside from cautiously, which is what I'd say they are right now, it'll be a game changer for mining.
We'll be right back after this message from our sponsor. Support for this episode comes from SunnySide Digital. Are you ready for the next Bitcoin bull run? Get ahead of the game by building out your Bitcoin mining infrastructure now. SunnySide Digital is your one-stop shop for everything Bitcoin mining, from transformers and switchgear to racks and miners. With a white glove approach to understanding your needs, they'll provide you with the hardware you need at the most competitive pricing possible. Say goodbye to your sourcing headaches and say hello to SunnySide Digital. Contact their sales team today at sunnysideinc.ca or via email at sales@sunnysideinc.ca. All right, now back to the show. Yeah, completely agree. And you're moving in a direction I wanted to kind of touch on next. You've got all that background in finance, and years of looking at capital allocation and how to be a good steward of capital. I'd love for you to touch on how you're seeing capital allocated to the Bitcoin mining space now versus maybe your early years in the space. Could you maybe touch on what the difference is with that capital allocation?
Uh, investors are certainly a lot more up to speed as to what Bitcoin mining is. Before, they would have no idea. I mean, there's still a lot of folks that don't, but anybody that is looking at the space has certainly done at least some of their homework. The public companies have done a much better job at educating the public of what we do. And now it's about educating the policymakers about what the sector actually does and the value that we add to society. From a capital availability perspective, I would say that there is more available relatively than before, but far less than there was a year and a half ago. We're obviously coming out, I hope, out of a winter cycle or a capital scarcity cycle, which is part of this sector. It is a very cyclical sector. And so right now, a lot of folks are still very hesitant to write checks. But there has been a material uptick in purchasing of hardware, infrastructure, and sites over the last, call it 2-3 months. Um, Once we hit 30,000 again, which I think will be very soon, I mean, I think a lot of those folks sitting on the sidelines will start getting the FOMO, which is part and parcel for the sector, and pile
Yeah,
back in again, right? Like that's the thing. You grow during the upcycle, you really learn how to be efficient during the down cycles, and then you wait to really ramp up again during the upcycle. So that's really what we're looking to do.
sure. Yeah, and I mean, there's the network hash rate. I just can't wrap my head around what's dry. I mean, it's just ripping the network hash rate, and it's. I mean, I know I keep hearing all sorts of different theories behind it. It's kind of a mix of, well, old units are coming online and people are redeploying miners that they had turned off when the price was 16,000. But yeah, I think you're already starting to see that interest come back into the space. um, so I'd be curious to get your take on capital allocation within a Bitcoin mining company. Do you think capital allocation and like capital strategy is going to change in this next the inevitable bull run that we're coming up to. And an example of that, sorry, just an example of what I mean is like treasury management. Do you think treasury management is going to change the hodl strategy? There are a couple pretty public companies making public statements about hodling, and it didn't go so well.
I think I think there should be a separation of what people or what companies or what teams do based on their operating profile. I think if you are positioning yourself as a de facto instrument for BTC exposure, you should hodl all day long. If you're positioning yourself as a free cash flow generating entity, you need to hodl only after all of your bills are paid. And I think that this will essentially be part of what the capital markets look for going forward. Even the second largest hodler in the space has finally come to terms and said that they will start using their BTC on their balance sheet when they need to, versus just being purely raise equity, raise debt, capital to keep the lights on. And I think that's probably the right thing for them to do. What I think that most should be doing is maintaining a neutral treasury strategy that, yeah, if you want to maintain your upside on BTC appreciation, no problem. But do that after you've paid off all of your bills and all of your financing. Because there's a lot of really strong teams that went way too far on the hodl side, and it basically cost them their business.
Yeah.
So, hopefully we are learning from the mistakes of others, and we're advancing as a sector. And I know some of the best teams out there, and they have very much learned those lessons.
Yeah. And do you think it's also maybe a function of new industry that's now starting to attract more seasoned, teams to come in and implement new treasury management strategies? Do you think that's also a piece of it?
I think that is a piece of it, and I think that that has to happen. Even more so that you get the folks that understand what risk and treasury management really is. So hiring from the streets, respective Wall Street, Bay Street, and then in London, I forget what it's, Gowling Street or something. Anyways, um, yeah, I think you have to integrate the folks that know what they're doing when it comes to risk management and capital preservation. Um, so yeah, I'm spot on.
Cool. I'm excited to see how it all develops, and it's similar to like the electrical industry. I'm with how the big Bitcoin mining companies are managing things moving forward is going to be cool to watch and see that evolve. So I want to switch gears a little bit. You mentioned at the top you're the CEO of SunnySide Digital, and you are very focused on growing, building, expanding, and really coming into the infrastructure wholesale space. So the other thing, all of our listeners are very aware. You guys are the sponsor for the show, which we're beyond excited about and very thankful for. And I'd love for you to go into who is SunnySide Digital. What do you do? How do you do it? And just kind of give the audience the full download on who you are.
SunnySide Digital is a computer hardware, data center infrastructure, wholesaler and broker and trader of record. We're an international team. Headquarters based out of Toronto, Ontario, up here north of the wall in Canada. Um, we've been in business since about 2021. And the business evolved from a natural need to maintain a pulse on the secondary market based on my work with a major public company before. And that pulse check activity transitioned into what has become SunnySide Digital now, where we count over 80% of the public miners as clients. Um, Many of them are on active mandates with us, where we help them with asset procurement or working capital conversion, meaning if they've got redundant assets that they'd like to convert to liquid to then redeploy on other projects, we help them on a confidential basis without any disclosure through MNDAs, obviously. But we're expanding to be able to offer infrastructure, components, and now soon to be released parts, maintenance services, repair services, diagnostic services, fleet management services, and also like immersion type technologies as well. So we're growing pretty quickly. We've got a team of 7, targeting to be 10 to 15 before end of the year. Um, we should be announcing some interesting partnerships at the conferences that we're part of coming up this summer. Um, and yeah, I mean, we haven't been advertising, which is why we haven't seen our logo many places. But if you ask around, you'll probably find out some of the deals we've been part of.
Thank you. Yeah, I think it's people in the space, people in the industry know you and know Sunnyside. But I appreciate for the greater audience the walkthrough. I'd love your take on how to value an ASIC miner. it's
Ooh.
it's kind of this, clear as mud type of a thing. I'd love for you to maybe shed some light on how does somebody go in and value an ASIC server.
Well, you pulled out your crystal ball first, um, because there's many ways to value a digital miner. Um, because first you have to take a look at which proof of work algorithm are you wanting to mine. If it's BTC, that's SHA-256. If it's Kadena, I think it's Eagle Song. If it's all these, yeah, there's a ton of different proof of work blockchains you could mine, but I'll stick to SHA-256.
Sure.
Fundamentally, you need to have a thesis of where hash rate's going, network hash rate's going, and you need to have a thesis as to where the price of BTC is going. And the good thing about, or the easy thing about BTC mining, not the good thing, but the easy thing, is that it's based on normalistic probabilistic curves. Meaning that if you look at a normal curve distribution, skinny, big, skinny, that's really how mining works because it's all probabilistic. Over time, you will eventually succeed based on your contribution of hash rate to the network, plus or minus your luck factor. And what that means is that if you have a thesis that BTC is going to be going up at some level or hash rate's going to be going at some level, and your ultimate return by plugging in your miner will yield higher than both of those, then it makes sense economically. And then you back out what your dollar per terahash is based on your input costs, which is your power, transmission, etc. costs, versus your actual deployment costs on a dollar per terahash basis for the units. So don't. I hope your eyes aren't glazing over yet, but
No,
I
no.
mean
Like I
it's
said at the top, this is the stuff that I wish I had paid more attention to in college, and I wish that I had gone this route. I'm finding I'm more interested in it now in the later years than when I was a dumb college kid. But no, I'm not glossy eyed at all. Um, you hear a lot about the people are trying, I think, to put it's kind of like you said, like a thumbs up or a thumbs down metric on miners, and you kind of hear that with the like joules per terahash or dollar per terahash. That I think that one is pretty commonplace. Watts per terahash. Are there any metrics like that that you think are like a good thumbs up, thumbs down when looking at a miner and the cost of your power and some of those other inputs?
yes. Um, you have to be careful as to the manufacturer that you're purchasing. And so the two manufacturers that I work with right now is MicroBT and Bitmain, or Bitmain and MicroBT. No order specifically. They're both taking a lot of volume and value and transactions that we're working on. The rest I can't speak to, given a lot of issues with some of their delivery, QA, QC, uh, DOA, which is dead on arrival, that have been observed, and in some cases, brand new boxes coming from the manufacturer filled with units that have been clearly used. Um, so you have to be very careful with who you work with in this space, even on the manufacturer side. Um, Regarding metrics, you mentioned joule per terahash and watt per terahash. That's the exact same metric. A watt is a joule, is a joule is a watt. And so that metric is really looking at the efficiency ratio, which is meaning how many watts do you need to put into the server to get out a hash, or really a terahash, because that's how we're really valuing units right now. So that's really the efficiency metric as to how high efficiency is your unit. And it's counterintuitive because the lower the joule per terahash, the higher the efficiency. And so obviously, if you can get your hands on a very low joule per terahash unit, which right now the best on spec is I think 21 JTH, which is the XP or XP Hydro, you know, that'll be a very high efficient unit. But if you're paying too much on a dollar per terahash basis, you'll never get an internal rate of return or ROI. If you get a good deal on that, then you should have a piece of hardware that should yield returns over a significant period of time, namely past the halvening. Because really, once we get to the halvening, all bets are off as to where BTC pricing goes.
Yep.
Luckily, as I said before, BTC is highly cyclical, and so you can draw some inferences based on previous historical activity. But that's not investment advice at all. Full stop.
Oh, come on.
Nope.
No, I'm joking. I appreciate the walkthrough on that. It's really helpful. While most of the audience knows that it's good to get your expert, deep dive on that. So I appreciate that a lot. As we, kind of look at, the previous years and then maybe this year and going a year or two into the future, what's your opinion on what's going to be more important for these Bitcoin mining companies? And maybe it depends on what time of time in the cycle, but do you think there's going to be more focus on like getting the infrastructure right and then procuring hardware, or do you think there's, do you need to get the hardware first and then get the infrastructure? I'd love your take on that.
I think the cost of power is really going to be the big battle for the larger miners over time. As we continue to see major scale, nation states are participating. You've got the country of Bhutan that has a 100 megawatt hydro facility that's being used for digital asset mining. You've got countries all over the world that have excess power that are now saying, holy shoot, we can plug in miners and all of a sudden have an economic incentive to have these major power generators built up, even though there's no economic activity, like in Africa. Like these things are happening, and their cost of power is like fractions of a penny, right? So I think for the large public miners, just like the large gold miners, it's really a global search for lowest input costs. And when it comes to hardware versus infrastructure, I don't think they're mutually exclusive. The hardware and infrastructure need to be done part and parcel so that you built up a system that is highly efficient, because you can't, unfortunately, we're not at a spot where you can plug in a unit into any other facility. Like you need to really think through the HVAC and engineering implications per unit. And now that we've got hydro, immersion, air, one phase cooling, two phase cooling, eventually, like there's a lot of more engineering than people think when we're going to be developing or continue to develop hyperscale digital asset mining facilities. So a non-answer, but an answer nonetheless.
Yeah, well, I think that's, again, it's phenomenal perspective on, what matters the most when you're looking at facilities and building out. Um, when it comes to like the commoditization of Bitcoin mining servers, what
Yep.
what are your thoughts? Do you think that the Bitcoin mining servers are going to start to commoditize, similar to like what you saw with computers, for example, just a regular computer? What do you think about that?
I mean, I think the capacity to manufacture high quality silicon is going to be the gating factor for how much of a commodity digital mining can actually be. because to manufacture the latest tech, we're now using the latest tech in silicon printing. And if you're looking at a customer, if you're in the shoes of a TSMC or a Samsung Foundries, and you're like, oh, I've got a $30 billion contract from Intel or Apple or whatever. Oh, and I've got $100 million contract from a digital mining manufacturer. Come on, like,
Yep.
you think you're going to get access? No. So that's the limiting factor on hash rate, and that's really where, again, you go back to the thesis as to where you think the hash rate's going to go. You have to work backwards from like macro. How many wafers will a TSMC produce in a year? How much allocation will Bitcoin mining get? And then back out the terahash generation, add a fudge number, and then you get to your overall terahash growth in a year. So
That's fascinating. Yeah.
that's really why I don't think it's going to be that commoditized. But I think over time, hash rate will continue to grow, obviously, but it's not to the point where it becomes unreasonable.
What do you think about Intel stepping in like the way that they did and manufacturing ASICs? That's the chips, by the way. It's not like they didn't actually build a miner, but what do
That's
you think
correct.
about what do you think about them stepping in maybe in a bigger way? Like maybe this last announcement from them is dip the toe in the water and oh hey, there's a lot of appetite out there and they start allocating runs to this. Do you think that's a scenario or no?
Uh,
We're getting into speculation here, by the way. I am
we're
aware of
getting
that.
into speculation and material non-public information.
Right.
What I would posit is that I think the market for digital mining is likely too small for Intel to come up with a full system design. I think the project team that worked on Bonanza 1 and 2 may have enough runway to do maybe Bonanza 3, but I don't know. The pricing of the hardware itself has collapsed to a point where I don't know if it even makes sense for them to continue on aside from selling down their existing chip run, because now there's literally bags of chips lying around and you don't want to dip those in cottage cheese or salsa. It's you need to figure out what to do with them. And there's a really strong team up here in Toronto actually called Epic Blockchain, and I think they're one of the front runners to actually get a full system design using the Intel chips. Um, so I think it's exciting, but I also don't have too much hope in Intel staying in the sector for too long, unless BTC rips to a million in the next. I think it's 65 days now or 63 days.
Yeah, I think 63 is where we're at. Yeah, it's let the countdown begin, right?
I've got a few. That would be great.
Yeah. Yeah. No, but you lost those in a boating accident, right? That's
Hey, that's funny.
um well, I appreciate the insight. I am interested, I curious to see the trend of the pricing of the Bitcoin mining servers themselves. I mean, you started to see some interesting financial products come about in that last bull run. People were taking loans against their fleets of miners, and then the bottom fell out on everything. And I was I'm just curious if the price of the servers is going to stay tied and correlated to the price of Bitcoin, moving into the future.
Yeah, it's definitely a lagging indicator. But I do think that with, again, interest in BTC, once or if BTC starts progressing north to where it was before historically, we will see a doubling, tripling, quadrupling of dollar per terahash values based on the economic profile and forecast of what the hardware will generate, um, with good power pricing. So we were selling hardware in the $100 per terahash range a year and a half ago, which you look back on and you're like, that's painful. But at the time, it wasn't unreasonable because of where everyone had assumed BTC was going to be going.
Oh, I
Um,
bought a couple at $70 per T. So yeah, no, I it's painful to
yeah, me
look back
too.
on. I get it.
Me too. Yeah,
Yeah, I get it. I'm right
yeah.
there with you.
So dollar cost averaging, folks. That is that is not investment advice, but That is great advice from some of the best finance folks in the world. Dollar cost averaging.
And you most likely will learn it the hard way if you don't just start out doing it. Yeah, it's
Uh,
so I'd love, maybe as we're kind of wrapping up the conversation here, Taras, to maybe ask, and you don't have to disclose names, but what I'd love to hear about is Sunnyside Digital starting to see and hear and generate interest from utility companies for hardware procurement and or just customer introductions for Bitcoin mining?
uh, the answer is yes. Three letters, yes.
That's fantastic. It's exciting. We won't dive into that too much. Then understanding with non disclosures in place and things like that. But that's exciting. I the whole point of my show is to help shed light on the overlap between the two industries and how they're
Yeah.
starting to come together in a big way. So that's cool.
Well, one thing that I can point to that is public, obviously, is the fantastic team at Talon Energy using the Susquehanna nuclear facility in Pennsylvania. They've got several subsidiaries, including Cumulus. That is a great example of using excess power capacity for the benefit of digital mining as well as data center technology generally, because it's not just digital mining there. They've got a massive hyperscale data center facility there, and that I think is exactly what we should be thinking about. Is that large scale power that when it's not in use because you don't have the population density to support it on a 24/7 basis, digital mining can be that economic backstop. It just makes sense.
Yeah. It if Talon is listening, I would love to get a representative from the company on the show. That would be fantastic to
We'll
hear.
get them on. Don't worry.
It would be fantastic to hear their thinking and how they work through that business model. So Taras, this conversation's been fantastic. You bring so much expertise to the table on not only the hardware side and the infrastructure, but then you also have that deep knowledge and background in the power side of things and getting large scale operations up and running. I always like to let my guests give a handoff for my audience. Make sure that they can get in touch with you and Sunnyside Digital, and again, you guys are sponsors, and we've got a way for them to get in touch with you there. But if you have any additional ways or additional handoffs, please feel free.
Yeah, I mean, take a look at our website, sunnysideinc.ca. Follow us on Twitter, on LinkedIn. We'll be at most of the major digital mining conferences around the world, really, over the next few years. So we are here to help. If you ever need anyone to bounce some ideas off of around building large-scale digital mining or data center facilities, feel free to reach out. We are again here to help. So I appreciate being on the show, Ben. Thank you.
Great. Well, Taras, thank you. Appreciate it. And you take care.
Thanks, bud.